Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
You know, I bust chops about the Royal Bank of Canada. You should see their Maple Leaf tickets.
Yeah.
You know, I mean, row 7, you get the Maple Leafs, it's down a little bit. It's not at the 50-yard line. It's down a little bit. And then there's other advantages of being at the Royal Bank of Canada.
I'm in the room. It's a typical Tuesday night. I'm listening to the kind of music.
Oh, row 7, Taylor, Toronto. Amy Wu Silverman on the Surveillance Taylor Tour. How was it, Amy? You and the Offspring went. How was it?
It was amazing. I didn't go in being a Swiftie, but I definitely converted, and my daughter is very happy about that.
Now,
it was very memorable.
What was the financial engineering like for Taylor? Like, were you popping like $10,000 for this extravaganza?
I took a fourth quarter hit, let's just put it that way. So it was a big present.
That's wonderful. Congratulations. Muhammad was in Paris.
Yes.
Muhammad's there, know.
Yep.
We have no life. Paul.
None.
We're like
whatsoever.
losers. Amy Wu Silverman with us right now with Royal Bank of Canada. Amy, I want you to characterize among the 4 cross moments, the derivative math that you're expert at, the new volatility that we face into 2025. Are you looking at fancy stuff like kurtosis? Are you looking at the skew? Or are you just looking at the fat tails, thin tails out there?
Well, Tom, we look at all those metrics, and, I'm noodling on my 2025 volatility outlook as we speak. I think it's going to be another paddling duck market. And what do I mean by that? It looks calm on the surface, really smooth, but you got those violent sector rotations underneath that's being masked by relatively damp index volatility. And your tails, Tom, I think they're definitely fatter.
The tails are fatter, and what does that mean for Mag 7? I'm going to suggest selected Mag 7s doing well, but other Mag 7s will behind the 8 ball. What does volatility study tell you of the distance between Apple and Microsoft and Palantir? Is it Palantir? Did I pronounce that
Palantir.
right? Palantir.
Yep.
I'm new, folks. What can I say? Palantir and NVIDIA.
Yeah, look, one thing we've always talked about is if tech goes, the market goes. And obviously that's just related to the Mag 7's weighting. I think when we think about next year, Mag 7 can't do badly. Certainly I think a lot of people are playing for that breadth widening trade. You continue to see that IWM proxy as where we see upside call buying, but Mag 7 cannot deteriorate. I do think people are being more specific about their hedges because they realize that when you think about S&P and you think about NASDAQ, you really are thinking about those 7 stocks. So if they want a really specific hedge, a geopolitical hedge, they have to go hunting for perhaps energy ETFs or other sector ETFs to get their hedge on.
Amy, the S&P 500, just a ripping year in 2024, up 25% here. What's the derivatives market tell you about 2025? I mean, what are the expectations out there?
They still continue to be really sanguine, and we've really seen that since the elections. We had this volatility risk premium that was absolutely massive going into U.S. elections, and I will tell you, before the polls even closed, that entire volatility risk premium collapsed, and it was telling you it was over before it was actually over. I thought that was super interesting, and the go forward still looks quite positive. You still see that positive momentum be getting more momentum. The only wrinkle I would say is the tails are fatter, meaning people are a little bit more worried about, especially with what we would call the intraday Twitter volatility of Trump, those tails potentially causing pockets of volatility and potholes as well.
So, I mean, we have, one would call a fairly red sweep across these elections. Are you seeing that reflected in the markets like, oh boy, there might be some real changes coming down the pike? I mean, I think usually the expectation is if you kind of got a split government, nothing's going to happen, less volatility. Now you might get some pretty sizable moves from a policy perspective.
Absolutely. And on top of that, you have what we would call idiosyncratic risk in the cabinet picks. And I'll just give you a really specific example. When you look at the healthcare ETF XLV, saw massive multi-standard deviation moves and volatility after RFK was chosen. And one thing we've talked about is when you kind of look at the correlation between those stocks, it's a little bit, baby out with the bathwater. People just made these kind of all out moves. And the question is, as we do our homework and we see actually what policies will or will not be enacted, do some of these moves become more knee jerk and we see them bouncing back? But right now, it's really relative volatility is high between the sectors. But again, that's being masked on the index level. You don't see it as much in the VIX.
When you look at this from a basic investment standpoint, and I'm going to give you a phrase, Amy, and I want you to translate it in your study, your optimism that I hear. This phrase, all-time high. What does ATH, all-time high, signal?
It's interesting because if you just go back to the old playbook, when you get that ATH, what are you supposed to do with it? Typically, what people do is they remain holding the stock market, but they sell little volatility on top. So they say, hey, I'm still going to be long my stocks, but maybe I start selling calls on them, collect a little bit more incremental yield, Tom. And then that's why you get this volatility dampening. Now, what I think is interesting is in the past, post-COVID, when you get positive momentum, it actually continues to grind that momentum higher, not lower. That's what I think people are a little tricked up by.
But if you do that and sell, and I know you bring in a premium, but are there gajillions of listeners and viewers out there, Amy Wu Silverman, giving up the total return going up by taking in that volatility premium?
Sure, there's always a trade-off, right? If we get that rip higher, of course, you don't get to participate if you sold that call. But, as the market continues to march 6,000, 6,500, 7,000, I think it becomes easier to do that, even if the volatility levels themselves that you're harvesting gets lower. I think that's the trade-off people are willing to make.
So, Amy, as we kind of go into 2025, do you expect, when you talk to your clients out there, your institutional investor clients, are they looking to assume risk, more risk, less risk? How are they kind of positioning themselves?
Here's what I would say. I'd say they still remain delta long the stock market. So they haven't, from a positioning perspective, taken money off the table, but they're willing to take a little bit of money they made this year and just own some hedges, own some downside protection, even if that's going to cost them a little burn. They're just more okay doing that with, as Tom said, that ATH being in play, but also with Trump in the office, we just know it tends to be a more volatile administration, especially when it comes to geopolitics or tariffs.
Amy, we don't care. All we want to know is your mom's ring in your pocket, her picture in your wallet, and you won't remember all my champagne problems. Did Taylor look down at you and your offspring after champagne problems when she burst into tears? I mean, is that what happened? She looked down and saw the joy on your daughter's face, and Taylor fell apart?
After Anti-Hero, we got a wave. It was very memorable. So after Anti-Hero, there was a little wave. I'm going to say it was to us, who knows, but we were very excited by it.
Amy Wu Silverman. This is the biggest response we got on YouTube today, is Amy Wu Silverman and Taylor. That's wonderful. Amy Wu Silverman, thank you so much. RBC Capital Markets there in Toronto.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us right now, and I don't know how this happened, Nathan Sheets needed a job after Fed, after IMF. Yep. And I don't know if it was Willem Bouter or Catherine Mann, but they said, let's hire this guy. They took a chance. He's one of America's greatest thinkers about where we are. And Nathan Sheets of Citigroup now, their global chief economist, has just done definitive work on our net worth. I look at the Bloomberg chart, Nathan, and it's pretty much I'll get it out, 3, 2, 1. Uninterrupted prosperity for America. Other nations aren't like that, are they, Dr. Sheets?
One of the differentiating features of this cycle has been the remarkable outperformance of the U.S. economy. You see that in GDP, you see that in consumption, but you especially see it in the asset markets and in wealth creation. The wealth that has been created in the United States over the last decade is historic and breathtaking. And we really have figured out a strategy to make our citizens in aggregate much wealthier than they have been previously.
Net worth from the bottom of 2020, three once-in-a-lifetime events on my Bloomberg chart, up 49%.
Yeah,
household net worth. But that's not everyone in America,
No,
Paul.
it's not. Nathan, when you go around the world and you talk to Citi's clients, and maybe they're not as familiar with the U.S. market, how do you kind of describe the U.S. economy here and the U.S. consumer?
Broadly speaking, if they're in investments, they have to be familiar with the U.S. market. This is where the action has been probably over the last 20 years. The United States is where the action has been. And I think the underlying driver, as you're suggesting, is this just very resilient economy that we have and the ongoing growth. And now if I have to find a sector that's particularly responsible, please, on the demand side, I think it's the consumer. And particularly, now this gets into the K-shaped discussion, particularly that top 40% of the income distribution.
I'm dying, Nathan, to ask. Nathan,
wonderful place.
I got to ask you this question. I think it's so important. In a K-shaped economy, who did we talk? Was it Francis Donald yesterday, BMO, about K-shape? How much of our net worth growth is in upper decile or upper quintile America? I mean, this whole election was about this, wasn't it?
Yeah, exactly. And I think the answer in this is a key. In aggregate, things look great, but approximately 100% of the net worth increase is in the top half of the income distribution and the wealth distribution, full stop. And you see a similar dispersion across sectors. Where's the big winning sector on the production side of the economy? It's tech. And I think this combination of these high net worth households that top, say, 40% of the income and wealth distribution, and the tech sector, that's been the differentiating factor for the United States relative to the rest of the world.
Nathan, the K-shaped economy in the U.S., how unusual are we today versus 20, 40, 60 years ago? Is the disparity today wider than it's ever been?
Notably, if you look at the distribution of wealth over, let's say, the past century, it is now far more unequal than it was 20 or 40 years ago. It's just kind of rocketed upward. But notably, there is another period, and this gives me pause, in which there was broadly similar inequality in the distribution of wealth in the economy. And that was during the 20s. And then a lot of wealth was destroyed, of course, during the Great Depression. And we came out of World War II with a much more equal wealth distribution. But it's gradually and significantly increased again in inequality over the last 70 years.
Nathan, I got to get this in because I know you're demanding that Andrew Hollenhorst do a 90-page look forward into 2025. Hollenhorst nailed that rates would go up and stay up. And then Citigroup turned around and said there'll be a vector here of Fed rate cuts. Let's get out front of your 2025 call. Are you going to reaffirm a sequence of Fed rate cuts with Dr. Hollenhorst?
Well, I think you've hit the nail on the head in terms of the outlook for 2025. And that is, how robust is this U.S. economy? And when we look at where we are and we extrapolate those trends forward, it feels like we're going to have another year of solid growth in 2025. My colleague Andrew Hollenhorst, who you mentioned, I think he's a little concerned about the labor market and the Fed's response. If we continue to have this solid economy that we have, maybe the Fed cuts a couple more times. If the economy's softer, then the Fed could be much more aggressive. And I think that's the dimension of the debate that we're having at Citi. Right. I think that's the debate that, broadly speaking, I have with clients all over the world is just how robust is this U.S. economy?
Nathan, thank you so much. Nathan Sheets, of course, with Citigroup, the chief economist. And I must say, a wonderful report on household net worth. We protect the copyright of all of our guests. Get that from Citigroup, not from us. We don't do that. We don't. Can you send out the report? We don't. We don't do that.
No.
We don't. They got to make a living. Nathan Sheets, thank you.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
And now Kit Juckes on the litmus paper of the global system, the foreign exchange market. Kit, do you model that euro can weaken through 1.00, weaken through parity, and do you see a resilient, stronger dollar?
I see a resilient, stronger dollar, or I see a dollar staying strong. Funny enough, Tom, your last guest kind of summed it up. If you think that spreads are super tight, but people only see the yield, I think the dollar's real effective valuation is super expensive, but the investors only see the yield. I mean, people are, the big excess savings countries are throwing all their money into the higher yielding dollar. The Japanese, the Chinese, the Germans, the Norwegians, the Canadians, they're all flowing, and they're not being put off by the valuation. They're not being put off by the spreads. They see the yield. I look at the valuation. If I were a credit guy, I'd see the spreads. They're not scared.
My radar, Kit Juckes, is all up in the Kit Juckes world, which is to use dollar and foreign exchange as a litmus paper. EM's a little soggy. I'll let you pick your company. Damien with a good note on that this morning. But Kit Juckes, what's the SocGen call for dollar and global FX dynamics, say out 6 months, out 8 months?
I think it's so expensive that I keep on thinking we're going to have a bit of a correction somewhere. It's going to wobble a bit. And I've kept on saying it's going to have a series of little corrections. It won't go back. Other currencies won't get as strong as they used to, but we need to take a pause because I'm bothered by the valuation. And I keep on being surprised. And right now, you look with this aggressive tariff talk, to whom some people naturally react by letting their currencies weaken. And you look at the resilience of the US economy over the last few months, and you have to say, I don't think the dollar, I'd love the dollar to cheapen up so I could buy it without worrying about that valuation. And I guess that's what everyone's trying to do. But I think it is. It's very stretched. It doesn't take much to turn it around. But at the moment, today, tomorrow, the rest of this year, I'm not standing in the way of the Trump trade, not for a second.
Kit, what did you make of the recent announcement of Scott Bessent as Treasury Secretary nominee? What did the currency markets how did they interpret that?
They thought they were getting an adult in the room, in the sense of someone who said, look, we need to have a plan to have 3% growth and a 3% of GDP budget deficit. We need a plan to have targeted tariffs. We need a plan to get economic activity strong, but also get our house in order in terms of our debt levels. So the market heard an adult in the room, but for as long as for a day, and then we'll see. We because this is going to be the piece. It's what actually gets put together in terms of a concrete plan to achieve U.S. goals, and we simply don't know how that's going to play out. At the moment, we're just bouncing off headlines. But I think Mr. Bessent is popular on Wall Street.
Japanese yen pushing up against 154 here, Kit. Where do you think the Bank of Japan goes with their currency?
Well, there's slightly problem because when it got up to 165, they were very scared that it had weakened too much. But when it came rushing back towards 140 really quickly, it was going too fast. So they'd like it to be at 100 in 10 years' time, I think, or something like that, if you see what I mean. They don't want it to go too fast. Right now, it is only reacting to the level of 10-year note yields. So they're a couple of basis points higher right now, and the yen's weakened a little bit. That they would like it to be stable, not getting any weaker, and then they'd like to raise rates a bit, normalize their monetary policy. That would help them, but not rocket. Whether the Treasury market is going to let that happen or not, we'll have to see, because there could still be some bumpy days ahead.
Where is the Juckes trade of the Pacific Rim? If you need to model out a trade right now, is it Aussie against something? Is it yen against something? Dare I say renminbi?
It's yen against the euro for starters, because the valuation's more attractive in that sense. It's probably yen against the New Zealand dollar, but that's got a lot of carry in it that causes me pain. But the Reserve Bank of New Zealand is going to cut rates again sometime about 2 o'clock in the morning, my time tomorrow. Certainly
Right.
the yen is the long side of that trade, but I don't want to give away too much carry. The yuan is just so stable, really, it doesn't move. That it moves very slowly compared to the others.
One of the big movers today, and really since the majority of the year, has been the weakness in the Mexican peso. What accounts for that, and where do you see levels?
I mean, I think it's still vulnerable, but it's just the Trump trade. It's kind of, they've obviously had a shift in their domestic politics, which makes people a little bit nervous. Now you've got a shift in U.S. politics, which makes people a little bit more nervous, and a lot of people have plowed into it. It's another one of those where you keep on thinking it's sold off enough, and you go, oh, don't feel comfortable yet. So I don't think, if you want to buy some pesos, wait till after Christmas. That would be my best guess. Let's get through to the end of the year before we're trying to get bargains. This is the wrong time of year for that.
So, Kit, just looking out there in your world, where do you see the best value, perhaps, over the next 6 to 12 months?
Value, if we thought value in terms of shopping, the cheap currency is the Japanese yen. It's cheap for a reason. They have no interest rates. So, very low interest rates is going to cause them a problem. It's going to be volatile. If you're buying something that everybody's, mad, nuts, crazy for, and so in fashion they can't see straight, you look no further than the US dollar. I don't think you look at any of the European currencies until we get some of the geopolitics out of the way, until we get some of the growth looking a little bit more sensible. So yeah, I think that's, if you really said, I want value, you'd go to Japan. Right. And if you said, I want growth, you'd go to the dollar.
We like people for their expertise, folks. Yes, and somebody asked, are you efforting Javier Blas on olive oil? We are efforting Javier Blas out of London on Spanish olive oil. We go to Kit Juckes with his knowledge of Spain on the shock of 2024, the boom in the Spanish economy, even with the horrific floods in Valencia. Kit Juckes, why is Spain leading Europe in economic vitality?
I think partly because the strong bits of the global economy are the service sector driven ones, the tourism driven ones, where people can spend their money. Also to the rest of Europe, frankly, this is a younger nation. It's not got massive excess savings. It's more dynamic, and so it can grow. If you go looking up further to the north, where the problem is aging populations with lots of savings, not enough desire to spend them, old industries. The Spanish look they look much happier than that, and now that they've had one big hiccup, but they'll just go back and rebuild. So they'll keep on going.
Kit Juckes, thank you so much, greatly appreciated.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your daily look at the front page is the Lisa Mateo Hour. Lisa, you can't top yesterday. Go.
Oh, God, thanks. Well, I'm starting with this. This came out in the Financial Times. The morale for Citigroup, some of the workers are not happy. They're not getting those year-end promotions. This is from sources that tell the Financial Times as many as 2,000 Citi employees, they could get a bump to their pay and title next month. But that's down from about 8,000 that used to get it. So you see the difference there. The decision, though, is still not final. And that changes for those in-seat promotions. That's the people who get the pay increases, better titles without changing their roles or responsibility. But even in those cases, the pay raise is expected to be limited to 15%. So it's not helping morale.
Sometimes if as a manager, if you don't have the money to pay somebody higher, one of the ways you can compensate them is just giving them a bump in title. And that kind of buys you a little time. So,
without the money.
But the
without
report,
the money.
and last night, 9 p.m., folks, we're watching this 24/7, and Lisa, I believe, is going to get to Morgan Stanley as well. Mm-hmm. Paul, how do you generate a pay cut? We want you to stay with us, but we need to cut your pay.
Yeah, that doesn't fly.
Yeah. It doesn't. I have no history where that works.
No, that does not.
People get furious.
Yes, it's just not good. But
that's
and again,
in the report, right?
But if
Lisa?
you work for these investment banks, the only real lever you have on your expenses is compensation and headcount, and that's it.
Yeah, but like I saw yesterday, Barclays is going back into Singapore. The answer is they always come back, and they have to have the top decile of employees. Not to pick on anyone, but you got to keep dominant constant.
Sure, absolutely.
Period.
Yep,
and there's a lot of dominant constants. Where out did they come in a program? But I I found the Citigroup report just fascinating. Leslie, thank you, Lisa, for doing that. What do you got next?
Okay, this is the Morgan Stanley. I want to get right to this so we have enough time to talk about it. But it's about their wealth management empire. You guys know, you probably live that the wealth management division, it oversees about $6 trillion of assets, represents close to half the firm's revenue. But you know the Wall Street Journal, you know they reported the DOJ, Federal Reserve, SEC, they're investigating their vetting procedures to see like how sufficient their anti-money laundering controls are. But now the Journal got these hands on their internal Morgan Stanley documents. They did interviews with current, former employees. So they found out a little bit more about those day-to-day operations, like how the bank wooed clients from countries known for financial corruption, drug trafficking, including Venezuela. Documents warning about the bank's risk increasing because of its exposure to Russia, sanctioned Russian banks.
One
so there's a
paragraph is
lot
on
going
Pakistan.
on. Yes,
Yep.
yes.
I mean, this isn't about somebody out in Joliet.
No.
Paul, this is about
No.
international troubled money.
Here at Bloomberg, like every financial institution in the U.S. at least, we take serious training on know your customer, and it's an issue globally, but certainly when you go outside of the U.S., it becomes that much more of a risk, and there's so many risk controls that Bloomberg has and other financial institutions have, but boy, is it tough.
You've lived this more than me. Know your end of quarter. Somebody's screaming, we got to make our hurdle for the end of corner, bring in that account from XYZ.
Yep.
That's the other side of the debate.
Exactly.
If we don't get that account, somebody else will get it.
Exactly right, and we won't make our numbers and things
We won't
like
make
that.
our
So the
numbers.
pressure is there, and there's so much wealth all around the world, the Middle East, Latin America.
That wants to come to America.
Exactly right. And the U.S. financial institutions want that, but they have to be extraordinarily careful about knowing your customer.
Lisa, what do you got?
Okay.
These are also serious. This isn't like Lisa.
Well then, okay, so let's switch it up a bit. Holiday dessert time. Do you cook
There we
pies?
go.
There we
I don't
go.
know if you cook pies or not, but it's going to be a little bit more pricey because the egg prices are on the rise.
Ken Fellio, eggs
Yes?
again, Ken. Eggs.
Oh,
it all
eggs,
comes
see?
back to eggs.
It always comes back to eggs.
It's the global
The
commodity.
bird flu outbreak. That's the reason why holiday baking season
We've
getting
been
underway.
talking about these
happens
flus for
every holiday. I don't know what it is. But here's the thing with the prices. Okay, so the good news is that the prices are still far from the recent peak that they had almost 2 years ago. The American Egg Board, it says those egg shortages at grocery stores, they've only been isolated, kind of temporary, so you're okay for now. But the average price of a dozen eggs, I'm not sure if you've been shopping lately, it's $3.37. That was in October. And that was up 63% from October of last year. So a big jump from, the same time last year. But it's just demand.
All right, here
for
we go.
eggs.
EGGSESUS. That is the ticker symbol for USDA broiler eggs set in incubators for the United States. I don't know, it's all over the place, but it's definitely up pretty substantially just in the last couple of months. It's up, let's call it 5% in the last couple of months. So prices are all over the place.
You got one more?
No, John Tucker stole it, so I'm good.
Oh, John Tucker stole it.
He stole my
Are
story.
you going to see Moana tomorrow? Everybody, we're all living vicariously through Lisa Mateo. Are you going to go see Moana 2 tomorrow?
I am not going to say. I might have to wait for the streaming. If I had the younger
That's
kiddos.
not what we want to hear from
I
the
know.
movie
If
theaters.
I want to hear from if I had younger kiddos.
Like Amy
I
Wu
would.
younger kids, right.
Amy Wu Silverman took a fourth quarter hit.
Yep.
Going to see Taylor. You took a fourth
Oof.
quarter hit.
I took a fourth
on
quarter
Wicked
hit
and
with
Gladiator.
Wicked, with Glicked. It took a fifth. Yeah, definitely a fourth quarter hit.
Lisa Mateo, thanks so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.